Hi, you're welcome to Financial Freedom Hub, your online earning and ultimate wealth creating YouTube channel. You are welcome to this edition of our new series on financial literacy or financial education. We started looking at personal financial management, and then we started with the introduction, and then we look at understanding personal financial management, where we look at the definition of personal finance, what personal finance is, and then the importance of managing personal finances in our previous video. If you haven't watched that video, look at it up there, watch it, and then come back or watch this one and go back, because it's a series and then we are building on the previous. In this video, we are going to look at the basic financial concepts, and we are going to be looking at these four financial concepts: income, expenses, assets, and liabilities. Every one of us, our monies that we earn at every point in time, they fall under these four concepts. We execute our finances, we use the money, we earn it, we use it under these four concepts. And so I thought it is important and wise for us to understand these concepts and how they impact our finances, and then how we can strategically position ourselves through knowledge and learning, that once we understand them, we see how to engage them to our profit so that we can easily attain financial freedom. And so if you have not subscribed to our channel, make sure you subscribe, and then you turn on the notification bell sign so that when we post a video, you will be among the first to be notified. All right, so you're welcome to this video. Like I said, we are looking at these four financial concepts: income, expenses, assets, and liabilities. So the first one is income. What is income? Income represents the money an individual receives. Money an individual receives, which can include, number one, earned income. So we have different categories of income, or different categorizations of income. The first one is earned income, which can include salary, wages, and bonuses. So this is money you earn for work you do actively. Maybe for every month you are an employee, and then you earn your salary at the end of every month. That is an earned income. You work actively and then you earn it. It can fall under salary, wages, and bonuses. This video cannot permit me to go into the details of what these individual income types are. And then the second income you can earn is passive income. And passive income is earned on rental. Example of passive income is rental income, dividends, and then interest. So rental income, maybe you rent out something, a space in your house, and then a shop, accommodation facility, and then you are earning income on it. You rent out any facility, and then you earn. You are not engaged in any active work, but you are earning income. We call it passive income. It can also be dividend. If you invest in the stocks, and then at the end of a period, the company is paying dividends on the earnings of the stock for that period, that is also passive income. And then you can also earn interest as income. So that is all passive income. And then the third category of income is what we call portfolio income. And portfolio income has to do with gains from investments like stocks. So you have capital gain. So you invest in stocks, and then you are paid dividend. Dividend can be paid either quarterly or annually or semi-annually, depending on the structure of the payment of the company you invest in. And then apart from the dividends that you earn, which is passive income, you can also earn capital gain. The value of the stock may go up, and then you are going to earn income from that kind of investment. That kind of income is called portfolio income. So when we talk of income, basically we are looking at these three components: earned income like salary, wages, bonuses; passive income like rental income, dividends, interest; and then portfolio income, that's for gains from investment like stocks. Then the second concept we want to look at is expenses. What are expenses? When we talk of expenses, we are referring to the costs incurred in daily life. So our daily expenditure, our daily spending, the cost that we incur in our daily spending. So you receive your salary, or you receive your rental income, or you receive your capital gain, and then you decide to go purchase a new pair of shoes. That is expenses. So it falls under expenses. And under expenses, we also have different categorizations of expenses. And so let's look at them quickly. Number one, we have fixed expenses or fixed expenditure. Fixed expense has to do with things like rent, mortgage, and insurance. These are fixed, and then they don't change in value, they don't change in quantity, they don't change in size. So if you have a certain rent you pay for your facility, your accommodation that you dwell in, and let's say every month you are paying $500, it will not change unless it is increased over time, and then it becomes stable and you are paying. So you know that this one is fixed. And then mortgage for a house you buy and then you are servicing, and then insurance that you are paying, whether car insurance or health insurance or whatever. These are fixed expenses. Okay, that's the first categorization of expenses. Number two category of expenses is variable expenses. These are expenses that can change or vary over time. You don't spend the same amount every day or every time you are going to do. And so this has to do with expenditure on things like groceries, utilities, and entertainment. Okay, so groceries are the daily expenditure that we spend on things that we use every day, like toiletries, food, etc. And then utilities like water, like electricity, heating, and all those ones. They are variable expenses. You pay as you spend, or you pay as you use. So whatever amount you use, that is what you will pay. So it is not fixed. You can decide to control that one. And then on entertainment, so you are paying maybe on a paid channel that you are watching, etc., or you go for movies, or you go for any entertainment. Those are all variable expenses. And then we have the third category of expenses, which we call discretionary expenses. Discretionary expenses. This include expenditure or expense on things like travel, dining out, or hobbies. Okay, so you decide that you are going to travel for vacation to a particular place with your family. These are discretionary expenses. And then you are going to dine out. You decide you are not going to cook in the house, so you are going to dine out either with friends or with family or alone. These are discretionary expenses. You can decide to do it or not to do it, or expenditure that is incurred on your hobbies. These are all discretionary expenses. So these are the three categories of expenses, the cost that is incurred in everyday life. So that is for expenses. Number three concept we want to look at is assets. What are assets? Okay. Assets are items of value that contribute to an individual's net worth. Okay. Items of value that contribute to an individual's net worth. We'll look at that term later on. Net worth has to do with all your value, all your assets, your incomes, and everything put together. If you are quantified in financial terms, what are you worth? What is your value, or what is your worth, is what we refer to as your net worth. So an asset is an item of value that contributes to an individual's net worth, such as real estate, investments, savings, and valuable possessions. So assets fall under things like real estate. So you possess real estate either for your personal use, for rental, your investments, all your investment put together come under your assets, your savings under your assets, your valuable possessions. Every valuable possession that adds value to you or brings income or saves you cost. These are all valuable possessions. When they are put together, we refer to them as assets. And then the last one we are looking at is liabilities. Liabilities. And liabilities have to do with debt or financial obligations, what you owe and what you are supposed to be paying. So debt or financial obligations, they are liabilities. So you see, the liabilities are the opposite of assets. So assets are items of value that contribute to your net worth, and then liabilities are debt or financial obligations that you are required to meet every specific time. And then these ones include things like loans, mortgages, and credit card balances. These are all liabilities. So you take a loan to do something, and then you are paying back on a monthly installment or quarterly, or depending on the term of the loan. Or you buy a house, and then you are paying the mortgage on the house. Or you have credit cards, and then you use them to purchase. And so you have credit card debt, and then you are servicing the credit card debt, and then interest on that debt. These are all liabilities. Okay, so a person's income includes their salary, dividends from investments, and rental property income. And then we said the expenses cover rent or mortgage payments, groceries, utility bills, and leisure activities. And then we also said assets might include retirement savings accounts, a house, and investments, while liabilities might consist of a mortgage and a car loan. Now, concerning a house, as to whether a house is an asset or liability is a subject for a future discussion, because there are people who debate that the house is not an asset, it's a liability. It depends on what the house does for you. If the house saves you cost on housing, then it becomes an asset. But if it takes money out of your pocket through expenses or servicing of the house, then it becomes a liability. So it is not pre-cut in stone, and it is not straightforward. It depends on what that house, whether it brings money or it saves money from leaving your pocket, then it becomes an asset. But if it takes money from your pocket every month, then it becomes a liability. All right, so basically, those are the four financial concepts we want to look at in this video. We looked at income, we look at expenses, we look at assets, and then we look at liabilities. So thanks for watching. In our next video, we are going to look at setting financial goals, how you can set financial goals, short-term goals, medium-term goals, and long-term goals, because every success depends on planning. There's a statement that failure to plan is a plan to fail. So if you don't plan your finances, that's why we are talking of personal financial management. Every management process has to do with goal setting. And so in our next video, we are going to start another version. We are going to look at setting financial goals. So subscribe to the channel, turn on the notification, like the video, leave a comment, ask your question. If you have any question, leave the question for us in the comment section. We will answer it, and then let's begin the conversation and interaction. Once again, thanks for watching, and I'll see you in the next video.